All right, folks, it's Earl the Money Coach, and here we're talking about compound interest, the eighth wonder of the world. Now, before we get started, make sure you like, comment, and subscribe, and click the links below for getting help for personal credit, business loans, and just to save overall on finances. So let's get to compound interest. Now, understand, folks, there's two kinds of interest. You have your simple interest and your compound interest. Simple interest is this. You have $100 that grows 10%. That means you're sitting at $110. All right. So if you're saving in a saving strategy, that $100 for the year is going to turn to $110. But year two, you're going to start back at that $100 again. And that $100 is what keeps getting that 10% interest. Now with compound interest, you're going to have that $100 is going to grow to $110. But now year two, instead of they're starting at $100, you're starting at $110. That's going to grow that 10% interest. So as you keep accumulating over time, the more money that grows, you keep compounding the whole thing instead of just every year starting at $100 and getting $10 in that scenario. So you have compound interest, but you have to understand the rule of 72, which is how compound interest works. Now, what's the rule of 72? It's very simple. It was made famous. It wasn't created by Albert Einstein, but was made famous by Albert Einstein. And what you want to do is you take your interest rate, divide it by 72, and that's going to show you how long it takes your money to double. Meaning what? If you have 1%, say you have $10,000, you have 1% growth, guess what? 1 divided by 72 is 72 years. Meaning it's going to take you 72 years to see your money double at 1%. Now, if you're getting 4%, it's going to be a little bit faster. If you're getting 8%, it's going to be a little bit faster. If you're going to get 10%, now guess what? Rule of 72, 10%, 10 divided by 72 means every 7.2 years, your money is going to double. But understand, folks, it could be used for you or it could be used against you. Now, what does that mean? Look at your credit cards. 17, 18. I had a young gentleman, his credit card was 19.76%. So what does that mean? 72 divided by 19% is what? About every 2.5, 3 years, his debt's doubling, but he's putting his money in an actual account getting less than 1%, which is the bank. So it means his whole lifetime is going to take for his money to double in his savings, but his debt's going to double every 2-3 years. So you want to make sure you're using compound interest for yourself and not against yourself, because look at your housing right now, 7%, 8%, meaning that what? Every 12 to 15 years, your interest is going to be making that price of your house double. So a $300,000 home sitting at 7-8%, that means it's going to be doubling every 12 to 15 years. So that $300,000 home in 30 years is going to cost you $900,000 due to compound interest. So you want to make sure you're using it for yourself, not against yourself. Now, there are many different forms, many different strategies on many different places where you can put your money where it can accumulate with compound interest. But make sure you understand this. When you're saving and investing your money, you don't want to have your money in accounts. Even if it's compounding, it's still volatile, like your Roth IRAs. Not saying Roth IRA is bad, but you want to learn the retirement red zone. Those 5 years before retirement, you want to start looking, hey, where can I move my money? So even though it's gaining 8, 9, 10%, it's not in a risky or volatile environment where I could lose a lot. I always give the prime example. One of my clients, last year, he was 64 in 2022. Guess what? He lost $176,000 when his IRAs and 401ks dropped 19%. So this year, now that he's 65, he wanted to retire, but he can't because he just lost $176,000. So even though, yes, he had the money growing tax-free, yes, he had the compound interest working for him, but he still had it in a volatile account. So these are the things, folks, that you want to understand the difference between your regular interest and compound interest. Have it work for you and have the rule of 72, how your money grows, be able to help you as best possible. So that's it, folks. Make sure, once again, you like, comment, and subscribe, and click below. Check my description. I have a lot of links there where you could actually get up to $250,000 in business credit or on personal loans. So could be huge, folks. Earl the Money Coach. We'll see you next time.